Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. I know it has been a week and a half since we had one of these episodes. I tried to do them over the past week and a half, but the earnings streams ended up going way too long into the night on the market close every single day. So hopefully there's been a lot of good content. It's just we've had a lot of earnings, including a big one for us, Palantir, that we'll talk about today. And so realistically, just getting out an episode every single day after doing the earnings stream just wasn't feasible. On top of that, I lost my voice last week. It's kind of getting better. I got a bit high off Mucinex last night. People didn't believe me when I said I got high, but I can get you high. I got high off Tylenol 5 years ago. That's a story for another day. 1,000 milligrams that was floating. But yeah, we're going to be recapping a bunch of earnings today. Palantir, we got some big Google news. We will hopefully get the daily recap to be more daily. My voice is starting to get better. Earnings season is starting to die off a little bit. We do have Nvidia coming up at the end of May, so that's going to be a big one. And we got a bunch of headlines today that we got to talk about. So here we go. Thank you, everybody, for being here. Let's get into it. All right. So first off, I think we got to do it. Palantir. Now, you guys have probably heard my thoughts on Palantir. If you've kept up with the market open, market close, we've talked about them in depth. We analyzed them after the earnings on Monday and on Palantir Weekly, which is going to be Friday night at 11 p.m. Eastern. We'll be discussing them even more. I thought it was an incredible quarter. I thought it was an absolutely incredible quarter. I had the honor and privilege of being invited onto Bloomberg TV to talk about the quarter. I uploaded that video yesterday as well. I'll link it in the description. So for those that haven't seen it, you can check it out. For everyone who reached out, thank you again. Very humbled to have the opportunity to be a vehicle for retail and communicate what we knew about this stock back when it was single digits, and now Wall Street mainstream media actually cares. So it's been a hell of a journey. In terms of the actual earnings, look, the numbers speak for themselves. Let me get the elephant out of the room, out of the way. The stock fell 15% on earnings. It's at 111 right now. We peaked out at about 130 after earnings. We were up like 3-4%. Then it came down about 15%. Why did that happen? It was aggressively moving into the earnings. So if you're a true long-term investor when it comes to Palantir, if you've been buying for the past couple of years, even if you've been buying for the past year, because the stock was $16 back in January of 2024, I just really don't think you're worried. The numbers that they put up were not only exceptional, they were numbers that are rivaling any other SaaS company, especially any SaaS company that wants to call them an AI growth name in the market. 39% year-over-year revenue growth, $628 million in U.S. revenues. That's up 55% year-over-year. The remaining deal values up 127% year-over-year. They're doing $900 million in revenue a quarter, basically $900 million, with less than 800 customers, $5.4 billion in cash, 71% U.S. commercial growth. I mean, these numbers, they're just incredible. The reason the stock was not able to match up to the numbers was, I think, well, two reasons. Number one, EPS they didn't beat. So revenue they beat by about 20 million. EPS they only beat, well, EPS they didn't beat. They came in at 13 cents adjusted. So that's what the street expected. And then the market cap was about 300 billion. It was higher than Salesforce. I mean, you cannot be trading at that aggressive of a multiple going into earnings and then not have an Nvidia type of quarter. And the fact that the stock, quite frankly, only fell 15%. I know people hate hearing that, but look, we're trading at a very, very aggressive multiple. And in order for us to justify trading at that multiple, eventually you got to put up the growth. I think there's a lot of qualitative dynamics by which people could use to justify the valuation. And I think those qualitative metrics aren't necessarily bad stories or bad arguments to say this is why people want to buy Palantir. But eventually investors expect that the company can grow into the valuation. And right now the valuation is expensive, and it was obviously very expensive going into earnings. And the numbers just weren't an Nvidia quarter. I actually thought they would put up 40% growth. They put up 39% growth. They couldn't get that extra 1%. I do think next quarter we're going to get closer to that 42, 45% range. If they had given us like 45-ish% growth, or you're talking about 940 to 950 million this quarter, it would have been really big. And if they had put up their first $1 billion quarter ever, which I think is probably coming by Q3, that would have been big as well. Unfortunately, they weren't able to do that. Stock is up a lot from the lows. It's up 70% from the April lows. It's up a lot from 2022. So from that perspective, I just don't think anyone who realistically has a long-term expectation on the stock is worried about the stock price action after earnings, because earnings themselves were phenomenal. But the actual company's progress, I thought, was just amazing. Karp on the earnings call basically said everything that we thought he was going to say. Europe is struggling. They did have a decline year over year in international growth. So Europe got to get their act together. Palantir's got to have better go-to-market in Europe. That's the one red flag I would say it's in this earnings. And hopefully that's a tailwind and a catalyst that will eventually manifest itself in Palantir's actual numbers. Net dollar retention, 127% year over year. Operating margins were at 20%. And what really is interesting about this is that when you look at the free cash flow margins and also the adjusted operating income margins, which was down 1% quarter over quarter from 45 to 44%, they are still performing at a role in which I think if we get rate cuts, which based on what Jay Powell said today, which we'll talk about, we're probably not getting in June. Palantir should still be able to maintain their net income, which a lot of people criticize has only been driven by the $5 billion they have in cash because of the interest they're getting on treasuries. If rate cuts happen, their operating incomes are going up to the point where if they get closer to that 23, 24% range, right now they're at 20%. I think they can get to 25% by the end of the year. They're not going to care that much about the net interest income because the actual income from operations from the business is going to be able to offset it. On top of that, I think we all have to ask the question of why are they able to get so much treasury income? And that's because they have $5.4 billion in cash because their adjusted free cash flow is incredible. So they keep adding more cash to be able to put on the balance sheet and then eventually put into treasuries. So I think from that perspective, all of the things that I look about, whether it comes to margins, top line revenue growth, and then growth catalysts going into the future, U.S. government accelerates a 45% year over year. That's probably Doge and all the nuances of how the DoD is needing to spend in a more efficient way. All of that was bullish to me. I mean, I cannot find, and I feel like I'm pretty objective about this because I've been covering the company for the past 5 years now. I cannot find the red flag in this earnings. And there are like small ancillary things like their dilution, share buybacks, international growth, but all of these things are rather inconsequential to the top line story. And the top line story is pretty damn phenomenal. Now, the valuation's very aggressive, and a lot of people are saying, the growth that Palantir is putting up right now still is not enough to justify that valuation, and I hear you. That's a fair argument. I just think, we're trading at triple digits. I think we've easily normalized the $70 to $100 range. Could it fall below that? Sure, anything's possible. But 70 to 100, I feel like, is where a lot of people feel comfortable buying the dip. We're down about 15% after earnings with numbers that you would argue could make you down 30 or 40%, given look, we needed a really blockbuster quarter. We had a great quarter. It just wasn't a quarter that was enough to get the street to be like, you know what, we got to keep them at that 130 range. However, if the street is willing to give us triple digits and keep us at triple digits, obviously the macro has a big impact on that. We've got a Palantir stock that is going to potentially start to normalize this 100 to 120 range. I'm not saying it's going to happen. I am saying it would be pretty damn cool because a lot of people are sitting on a lot of gains and, a lot of us don't want to sell. So we want to be able to see that doesn't necessarily get eviscerated like it did back in April. But again, the reason it went down in April was because of the entire market, not just Palantir independently. So they had a good earnings. It was not a good earnings enough to gap up to 140, 150, but it also, I don't think, was a horrible earnings to take us back down to 60, 50. If we settle in between 70 and 100, that's fine. If we actually are able to maintain triple digits, I think that's also really going to be good. Overall, I thought it was a hell of a quarter. Palantir did a great job. And I think this growth story is just getting started. And based on all the analysts that upgraded the stock after earnings, and the only thing they cited as a risk was valuation, it seems like this growth story is probably in just the beginning stages. And as long as Palantir continues to execute, I think we will have one of the best companies in the world that is proving how important they are and likely will become the most important software company on the planet. All right, next up is Google. So Google, rough day, rough day on the Googs. What happened to Google? Well, Google was down 9% today. It recovered a little bit towards the end of the day after Google dealt with some issues. And what were those issues? Well, apparently Apple came out and basically said, hey, we are seeing less search volume via Safari. Google is the default browser on every iPhone in Safari. And they also said we are exploring different ways to incorporate large language models to be able to help users with their search queries. Google right here, down about 7.26% of the day. At one point, it was below 150 at 149. It's at 152 right now. Why did the stock recover? There was some Nvidia news that we'll talk about that kind of pumped the entire market. So we'll get to that in a second. But overall, this was the worst day for Google since January of 2024. And the reason it was such an aggressively ugly day for Google is because they can't afford, literally, to lose the distribution that Apple gives them. Apple's services revenue, which is growing at double digits right now, 1/5 of that, 20% of that, is the $20 billion a year that Google pays them to be the default search engine on the Safari browser. I mean, I've been using Safari ever since I've had an iPhone for like 15 years, and every search I make goes through Google, right? So even with all the LLMs, ChatGPT, Grok, XAI, etc., people still, if you use Safari on the iPhone, are using Google every single day. The testimony that the senior vice president of the services growth in Apple said today was exactly, and I quote, "I lose sleep at night over the idea that we could lose the amount of money that Google pays us as a company for the distribution that we give them on the iPhone." The fact that he said that is, I think, to regulators basically saying Google's definitely got a monopoly on digital advertising. They've already accused them of this. The question is going to be now how this gets litigated in court. But number two, Apple was down 2% today because the market was like, oh, so Apple's going to be losing a good chunk of revenue if the DOJ really goes down this route. And then Google's losing their distribution. 55% of Google's revenue right now is search. 80% of it is advertising if you include YouTube. So the growth rates on search already, Google had a monster quarter, and we covered that last week. But the quarter, the one thing that people didn't like about it, and probably why the stock really didn't get a gap up like some of these other names did after earnings, is because search revenues grew at 10%. Great. Search revenues, multi-$100 billion business yearly. So like search revenues growing at 10% is still amazing. Unless you look at the comparison from 4 quarters ago, it was 15%, then 14, then 12, then 11, then this quarter it was 10. Cloud is going the opposite direction with GCP growing at 28% year over year. Search is going down. Now, this is not a good thing for the overall idea around what Google represents, which is this concept of, hey, we organize the world's information, but if the world's information is being organized in a way that doesn't include traditional search, that is going to lead to Apple developing different areas and infrastructure on how they think about search. It is going to lead to Google potentially being broken up. And if they are broken up, if you don't have Chrome here, you don't have YouTube, you don't have Android, which I don't think it's going to be that aggressive of a breakup. But if it is somewhat of a breakup that takes away their core offerings, their search, I guess you could call it, ecosystem starts to get disrupted. And then overall, if people just don't care about clicking on ads anymore because we get the answers immediately, that is also something that's not the best for Google. Now, I own Google. I have shares. I have options. Those options are pretty underwater, but my shares are whatever. My take here is that I think the market is underlooking Google's capacity to use their ecosystem, their daily active users, their 100 billion in cash and the 70 billion of buybacks that they can probably start allocating now, given the stock's down 8%, and the variety of other mechanisms they have, like DeepMind, their AI research team, Waymo, Apptronic, and robotics, etc., to create a compelling argument for why this company should not be trading at the discounted multiples that it's trading at, simply because of what the market perceives as an existential threat. That doesn't mean I'm super, I need to go buy the dip like crazy on Google. I'm just saying I don't think this 8% decline is emblematic of Google's actual business. It is emblematic of a perception on Google's business that is obviously not really, in the best place right now, especially off the headlines today. But nothing has even happened yet. So I just think there's a lot of core components to the moat of Google that is really hard to just say, oh, that goes away because search revenues might start becoming not as relevant as before. And if search revenues do start declining, well, Google's got to pivot. And I think this is where it comes down to, do you trust Sundar? And if you don't, I think you don't invest. If you do, then I think you believe that Sundar has a plan to be able to navigate the AI search overviews, to navigate the 350 million Gemini users, to maybe make some political ways to get Gemini into Apple. I mean, there's so many things that he could do to make sure that ChatGPT and Grok are not the core offerings that the world is using 20 years from now. But it's up to Sundar to see if he can do it. So this is a new story. I'm reading a lot of info, developing it, trying to understand the nuances of the court case, trying to figure out what are Google's options. So I'm still trying to figure out hey, is this a dip that's really worth buying? But I think if you're long Google, I don't think this is an existential threat to get rid of your position. I do think it is one of the best versions of an existential threat we've seen over the past couple of years. I mean, people have been saying search has been dying for a long time. Today is one of the times where I think the market started recognizing that maybe this is something that's not as solid as we thought it was. And so eventually we're going to have to see how this plays out. But I still believe in Google, still believe in Sundar, still believe that there's a lot of opportunities for them to navigate all this. It's just going to be a question of where the world is going in terms of search. And if it truly is leaving the 10 blue links, the question is, can Google be relevant even without those 10 blue links? All right, last two topics of the day, JPow and Nvidia. So let's talk JPow first, then we'll talk Nvidia. We got the Nvidia headline basically into the close. I mean, Nvidia pumped 2% right into the market close. We had 10 minutes left in the market, and then we covered JPow throughout the day. So what happened with JPow? Well, we had an FOMC meeting. Mr. Jerome Powell was asked, some questions like he's always asked. And Powell had nothing to say. I mean, quite frankly, this FOMC meeting can be summarized by Powell basically being like, hey, I don't know. We got to be data dependent. It's Trump's fault for all the different problems we have. He didn't literally say that, but that's basically what you could understand from his vibe. And the tariffs might still create so much volatility that we might not be able to cut rates. I was personally disappointed in Powell in this press conference. I think it's obvious we should be cutting rates. If the tariffs are going to have an impact on demand, aka they're going to raise prices, which is inflationary, but people stop buying things as much as they're currently buying right now, that's going to be deflationary. That is going to be a world in which we have more demand destruction, which means we should probably cut rates. That also means we're probably going to have more layoffs, which means we should cut rates. Oil is below 60. We should cut rates. Inventory, when you look at housing, is showing a steep decline and probably a deflationary spiral as soon as we get the first 25 or 50 bips of a cut, which necessitates that it's time to begin cutting rates. Everything that you look at from a macro perspective makes it obvious. The European Central Bank cutting for the past 7 times. If you exclude shelter, their interest rates are like below 2%. Right now they're at 2.75%, but that's only because you have shelter. CPI is at 2.4% in the United States. Powell's target is 2%. What happens if we come in at 2.1, 2.2, even 2.3? There's no reason for the federal funds rate to be 4.5% when CPI in America is trending to get to 2%, if not 2.2, 2.3%. Having said all of that, the lack of the inability for him to answer any question, and the lack of his understanding of pointing the market towards a direction. Markets were relatively flat throughout the entire meeting because markets had no idea what he was trying to say, because every time he was asked a question about anything specific about unemployment, inflation, the data from the non-farm payrolls, he kept saying, we just need more data to be able to make a decision on what we're going to do in June. Having said all that, the one sympathetic approach I can have towards Powell is he is very afraid of the volatility that's going to come from Trump. And because he's so afraid of the tariff volatility, his argument's like, wait a second, I don't know what this guy's going to do. None of this is my fault. We had an economy that had inflation coming down. Then Trump came in, decided to mess everything up with all this tariff volatility. This is his recession, his problem, until I get more data. He even specifically said, until I get more of an understanding of what's going on with trade deals. The Cent, by the way, big news yesterday, is now going to China to talk to the vice premier. That's going to be happening. Sorry, he's going to go to Switzerland to talk to the Chinese vice premier from May 9th to May 12th. So we do have some updates on the China deal, and it looks like there's at least a discussion that is getting ready to be had. Powell said he needs to wait until he sees what the trade deals look like, what the tariffs look like, and if the average tariff inflation rate or the average tariff interest rate is going to start coming down, which would hopefully lower the overall inflation rate in the United States, which right now, that inflation rate Powell thinks can be massively extenuated based on the idea that tariffs continue to stay in place. So on one side, I think it's obvious we need to cut rates. And even in the worst case scenario of tariffs, we have a slowdown in the economy. And Powell, if he doesn't cut rates in June, in my opinion, he will be late, just like he was in 2021. And I don't think he wants to be late. But based on his hawkish tone today, it felt like he didn't even care if he was going to be late, because it's whatever. It feels like he's just saying, I have all the time in the world. I need more data, and this is Trump's problem. On the sympathetic side, I understand why he thinks he needs to be more cautious, given the tariff inflation from Trump and the tariff volatility from Trump can be more aggressive, and it could potentially create stagflation where we have growth slow down, but inflation continue to stay up, which would be the worst thing for everybody. But I don't think that's going to happen. I think if unemployment really ramps up, inflation is going to slow down simply because of the fact that there will be more people that are unemployed. Now, also to Powell's credit, non-farm payrolls last week were really good. Market thought we would get 130,000 jobs. We came in at 177,000 jobs versus the expectation. So it's like hard to say that the labor market's necessarily collapsing, even though unemployment's up 1% over the past 8 months. But it's not that hard to say that inflation's coming down. And I think Powell's choosing the labor market over inflation coming down because he thinks inflation will go up if we have the tariffs. But if we have the tariffs and unemployment comes down, I think, or unemployment goes up, then I think inflation will come down because we're going to have less people having jobs, less people spending money. So from that perspective, it was kind of a nothing burger today. We really didn't get any meaningful details outside of Powell basically saying, you know what, I'm going to wait until I get more data. Now, in the context of Nvidia, Trump and the White House, it's not confirmed yet, but this is the news we got 10 minutes into the close today, said, hey, we might be repealing the Biden AI diffusion law on Nvidia. Now, what is this diffusion law? In a nutshell, Biden, 2 days before he left office, signed a law that basically said Nvidia and chip companies cannot sell their chips to other countries, like that are adversaries with the United States, right? And it lists a bunch of different countries that are adversaries with the United States. And Nvidia, which doesn't tend to be political, they put out a blog. I remember covering this back in January, and they were just like, this is freaking stupid. And you are not going to allow America to be a leader in AI with these types of arbitrary ancillary ways to stop Nvidia from progressing. Apparently, the White House, hopefully, because Jensen talked to Trump over the past couple of weeks, has changed their mind. They are repealing, reportedly, the AI diffusion law. That doesn't mean Nvidia is going to be able to sell into China, but it does mean Nvidia is probably going to be able to sell into Saudi Arabia and the Middle East, which is going to be a massive part, not a massive part of their business, but it's one part of their business that helps maintain their numbers. China, I think they lost China revenue for the year, unless Scott Bessent gets a deal where, you know, he can meaningfully pawn off Nvidia as a chess move inside of this trade negotiation and hopefully leverage them to be able to get something else from the Chinese. But I'm discounting probably $17 billion of revenue that we are losing this year. We know we're going to get a $5.5 billion charge off in Q1 for Nvidia based on losing China revenues. But the stock was up, hit almost 117 in the after hours. I think it hit 117.50. Now it's at like 116.40 because of the fact that now Nvidia has the opportunity to sell into other parts of the world. So very bullish Nvidia, bullish AMD, bullish all the semiconductor stocks. I really don't think Nvidia is going to be able to pump after earnings if the broader market's not pumping. I just think it's going to be hard to see Nvidia independently at like 130, 140 all-time highs. If the market's not pumping with it, I think all the semiconductor names are going to pump with Nvidia. So if we get a massive pump, we're going to probably need to see Nvidia get that momentum based on the broader market. If we don't get a broader market pump, I think Nvidia stays relatively flat on earnings, even if they have good numbers, because market participants are going to be a little bit more subdued because we're not going to have China revenue. EPS estimates are probably going to go down a little bit, and we're going to need Nvidia to have some time to be able to resolve everything going on with export controls. But it was a good thing that we got this deal, or this rumor of a deal, after hours. And hopefully that clears everything up for Nvidia going into the future. All right, that's it for me. Thank you, everybody, for listening and watching. Again, I am sorry the daily recap has been taking a bit of a pause. Hopefully the content has been there for everyone to enjoy. Voice is still a little bit raspy, so we're going to try to clear that up and get back to it going into next week. And yeah, I still haven't talked about Meta, Robinhood, Microsoft. I'm going to try to weaving in their earnings coverage into these daily recaps and kind of recapping what we experienced last week, because those companies put up monster results, and those results are very important to analyze in the context of the macro. But TLDR, China trade deal soon, inflation coming down, earnings good, Powell hopefully cuts rates. You put all that together, I think we still have a pretty good shot of being in a bull market. Question is just now if that ends up playing out. All right. Thank you, everybody. Appreciate it. I'll see you guys on the next one. And thank you again for all the support on the Bloomberg interview. The bricks made it to Bloomberg. The real bricks made it to Bloomberg. And it just means the world to get everybody's support. Thank you, everybody. I'll see you guys in the next one.